Let's talk a little bit about the environment that you've been operating through. What would you say was the biggest takeaway during this 3-month stretch?
Well, I think the interesting piece in the last 3 months has actually been less about the trading activity itself. It continued at a pace that a lot of us expected from the volatility we saw in the marketplace. But what we found really interesting, really in the last 3 months and into July as well, is an uptick in the companies that are looking to raise capital. The concern going into the pandemic with the volatility that we would see is that would be challenging for companies to raise money. But we're starting to see more transactions happening and more activity in the pipeline going forward. And that's a really good sign for what's to come.
All right, let's dig in a little deeper to that. We just had a conversation with the CEO of Canaccord Genuity, who highlighted there's been a lot of interest in mining. You know, a lot of people talking about gold right now. So some of those companies have been quite active recently. But I've seen a few IPOs that we've covered here on the network in recent months. Dye & Durham. So there are some technology companies that are also able to ride the wave of interest around technology. Are you talking about IPO activity? Are you talking about just going out to the market and raising money? Kind of what's the color of what you're seeing and hearing?
Yeah, we're very much talking about both. So you raised a really important one there in terms of Dye & Durham, and they had a fantastic offering a couple of weeks ago. We were very happy to help bring them forward. And there are other companies that are like that in the pipeline on the new initial listing side. But there are also, as you said, a lot of existing companies that are looking to tap the markets to finance. And we saw in the second quarter a high number of transactions, but they tended to be in smaller size. We weren't seeing the big deals that we saw a year ago. But the anecdotal feedback I get from our team that works with the listed issuers is that they're as busy as they've been, probably in the last 18 months. This is as busy as they've been in terms of file load, in terms of what they're working with issuers. So it's both those additional financings that you mentioned and the new IPOs. And one of the things that you touched on in there, John, was the strength around mining. You're seeing it not only in terms of the activity around issues and new financing, but in terms of the trading activity as well. And that's been actually a change from what we saw in Q1 and Q2. As we've come into July, the strength in mining has really driven a lot of interest in our venture exchange, and our venture exchange volumes in July were the highest we've seen them in years.
So that's one sign of optimism, but of course there's also a lot of companies that have an uncertain future, and during this pandemic they needed help from everybody that goes into making that business successful. It might be help with landlords or with the banks that they work with. They've even needed your help as well when it comes to some of the listing requirements. Can you tell us about the dialogue you're having right now on how some of those more challenged companies are going to be sort of approaching the issue of staying listed, and what kind of dialogue you're having with them right now?
Yeah, it's a super question, John. So, I mean, in the early stage of it, what we were trying to do was reduce some of the administrative and regulatory burden on companies. So some of those initiatives were things like delaying or deferring annual general meetings, certain filings, things like that, so that they could really focus on their business. And as we got farther in, we made a substantial rule relief in really very early in the pandemic in April around venture companies. And these are ones, small companies that are trying to stay afloat. We relaxed the minimum share price required for doing an additional financing. And so this was really well received by all actors in the space in terms of making sure that those companies that are challenged, even though their share prices have dropped low, still have the ability to access the market, to raise capital, to recapitalize their balance sheet and keep going. We actually are continuing to interact with the entire financial community. So one of the benefits of all of us working remotely is it's actually been easier for us to get together meetings of our executives at the banks and the dealers to talk about what we need to do in the marketplace to provide more relief. And we are getting some consistent ideas on where we can focus on rule harmonization between Canada and the U.S., where we can look at other relief measures around disclosure. We've put a lot of recommendations into the modernization task force in Ontario, and previously to that, to the burden reduction task force that the OC is leading. And they're all in that same spirit, John, in terms of how do we make life a little easier for a public company, take away some of the blurry lines between public and private, and ensure that these companies can continue to operate, and when the economy recovers, can really restart.
I want to dig a little deeper into that work from home theme, and obviously you guys we cover the virtual bell ringings every day, so in some cases a lot more people can join you for that than maybe traditionally if they couldn't travel, for example, to Toronto. We have heard from many of the big banks who, as they look at where we are in this pandemic, even if there are encouraging signs on the health front in this country, they are reluctant to send employees back to work this fall, many pushing that out to 2021. Can you set the record straight on what your policies are going to be about bringing employees back for the remainder of this year?
Yeah, well, I mean, first of all, let me thank the employees that have been continuing to come into the office. So because we have some critical functions that can't be done from home, we actually have about 4% of our staff who have been working on site, and we are doing everything we can in terms of social distancing and health and safety measures to ensure that they can work safely. So what we're intending to do, John, is recognizing, first of all, that the health and safety of the employees is the paramount importance, and that our employee base has been able to shift to work from home really successfully. We've got really good digital tools and workflow that we can actually continue to do this for the foreseeable future. What we're going to do for our staff is what we anticipate, if all things continue on the trajectory they're on, that we will make our office available to them in the fall. And by available, I mean we are not going to require people to come back, but we are going to make it available for folks that prefer not to be working at home for whatever reasons they've got. And one of the tools that we've been using, John, in terms of really connecting with staff is a biweekly call that I do with every one of our people managers in the organization. It's 130 plus people, so that we can talk about exactly that. How are their teams doing? How's their workflow, their productivity, but also how's their mental health? And always remembering that everyone that's working at home or working in the office has got a different situation that they're dealing with during COVID-19, be it do they have kids at home that aren't going back to school, do they have elderly parents they need to take care of, or are they living alone and need some other social interaction. So I think that we're blessed because of the capabilities that we've got, that we can be quite flexible. And so our approach will be to reopen our office for those that want to use it, keep that capacity very low, no more than 20-25% of people in there with the appropriate social distancing and masking in terms of common space, and really leave it flexible for the employees themselves so that they can choose to come back when they are ready. And for the foreseeable future, they can continue to work at home if that's what's best for them.